Now, every single time frame in trading tells a story, and every single time frame has a story behind it. And your job as a trader is to figure out what each and every time frame story is telling you in order to read price and take the best possible entries. Now, this top-down analysis strategy works on all time frames, in all sessions, on all strategies. And inside this video, I'll be going over exactly how top-down analysis works and how you can implement it as well in your trading. And specifically, I'll be going over a $10,000 trading week I just had, with obviously verifiable proof of everything. So without yapping anymore, let's just cut straight into it. Now, the process of top-down analysis is by taking advantage of the higher time frames, then going to the medium time frames, and then going to the lower time frames. Because as I said, you want to read every single time frame because every single time frame has a story behind it. And if you know how to read that, which I'm going to be going over inside this video, you can make a lot of money trading. Now, we use the higher time frame for direction and bias. Then we use the medium time frames for setup confirmation, and then the lower time frames for entry confirmation. So do you see how the picture is already formed? We're using every single time frame, and we'll get into this specifically which time frames works on this, and how we then go from top to medium to bottom, so top down. Now, you also got to understand that the markets are fractal, and this means that the same patterns on the weekly time frames or the daily time frame is going to happen on the 1 hour, 30 minute, 15 minute. So the exact same patterns on the higher time frames is also going to, funny enough, happen on the lower time frames. Now, as I said, this means that we can use top-down analysis on every single time frame and take advantage of it that way. But that means we also have to pair the time frames logically. You obviously can't just go from the weekly time frame to the 15-minute time frame. It doesn't make sense. You have to go from top to medium to bottom, so top-down analysis, and you have to take one step down at a time. So for example, you go from the weekly to the daily to the 4 hour. That's again to go over the direction and bias. Then you go over the 4 hour, 1 hour and 30 minutes for setup confirmation. And then we go down to the lower time frames, go to the 30 minute, 15 minute, 5 minute, maybe even sometimes the 1 minute to get the best possible sniper entries. Now it's time to hop on the real charts and actually show you guys some results, because obviously I can just sit here all day and just talk about how it works, but obviously I'm going to show you guys real live chart examples as well on exactly how to use top-down analysis, and specifically how I made $10,000 last week trading and taking advantage of top-down analysis. Now, obviously, I'll also be going over every single trade with top-down analysis on how to find the direction and bias on the higher time frames and then refining it on the lower time frames to get the best possible trades. And now, as I said, top-down analysis obviously works on all strategies, and I'm not even, just saying that for the sake of it. It works on all strategies, but I found specifically that it works best on my model, which over 5 years had made me over $250,000 in profits, in trading profits, verifiable proof of everything, live accounts, payouts, banks, you got it all. Not no fake demo guru around here, not no course selling shit. And keep in mind, before I go over my model, it's a stupidly simple 3-step strategy. Like, I'm talking literally step by step and only 3 steps. And keep in mind, it has an over 80% win rate, and obviously works on all pairs in all sessions, on all time frames, because top-down analysis works on all time frames. So without me yapping anymore, let's just get into the strategy, the 3-step stupidly simple strategy. That obviously made me 10K a week, but we'll go over that right after this. Now, this strategy is called the CCL, or just CCL, because it's continuation, consolidation, liquidity. And the markets can only be in one of these 3 cycles at a time. So either in the continuation, and then after the continuation, we start consolidating. After the consolidation, liquidity, and then it starts repeating itself. And when something is repeatable, you can make a lot of fucking money in trading. And now I'm going to show you guys how that works, right? First of all, step number 1, identify the overall direction and bias. So this is called the continuation phase, aka a bit of top-down analysis. We'll go over this later on with the chart examples and trade recaps. But basically, you guys can see right here on the left, we've got a bullish example. On the right, you've got a bearish example. Pretty self-explanatory. Step number 2 is to wait for buy side and sell side liquidity to form. And whenever I say buy side and sell side liquidity equals stop losses from retail traders, and stop losses from retail traders equals money. Okay, so liquidity essentially is just stop losses and money. So whenever I say buy side and sell side liquidity, that means that there's resting buy side liquidity up here above previous highs and resting sell side liquidity down here below previous lows. And liquidity, as I said, equals stop losses from retail traders, and obviously that equals to money. So there's essentially resting money up here and resting money down here. Now, when you compare this with top-down analysis and this 3-step strategy, you essentially don't enter like everyone else, but you wait for everyone to get stop hunted, manipulated, and liquidated. And then when everyone has gotten stopped out, you enter. And that's how you stay on top of the markets. That's how this edge works. Because if 99% of traders are trading the retail way of trading, right? A push up, push down, right? So a, break and retest essentially, and then a continuation. If everyone is trading this way, everyone would just be buying here, stop loss here, take profit here. Like, everyone would be a millionaire. And if this worked, everyone would be, everyone would be profitable. But the problem is this doesn't work. A normal break and retest does not work. So instead of entering right here, right, instead of entering once we reject this level right here, so entering here, stop loss here, and take profit up here, like 99% of traders, well, you don't enter there, but you wait for everyone to get stopped out, and then you can enter post liquidity grab. So there's resting buy side here, resting sell side here, aka resting stop losses. The market obviously hunts that at a market open using top-down analysis. We'll get into this later on. And then it moves when everyone has gotten stopped out, and that's what we want to take advantage of. Now, that leads us to step number 3, wait for a liquidity grab. Now, this is funny enough also the liquidity phase, but this is essentially when everyone gets stopped out. Right here, you can see resting sell-side liquidity down here, aka resting stop losses. And then the market, funny enough, pushes down, triggers everyone's stop losses. Well, not our stop loss, obviously, because we know this strategy. And then after that, we can take advantage of this whole continuation. So continuation, consolidation, liquidity, right? And after we get the liquidity, we get the continuation again, repeatable cycle. You can see it here, right? Continuation, then we start moving sideways, pre-market open, typically happens at pre-market open. And then what do we get after the continuation, consolidation? We get the liquidity phase right here. What do we get after the CCL? Well, we start continuing again, continuing that higher time frame direction and bias. So 3-step strategy: continuation, consolidation, liquidity, continuation, repeatable cycle, money printer basically. And now you simply enter your position post liquidity grab and place your stop loss and take profit logically. Now this was a quick overview of this strategy. Let me go over how I made $10,000 in a single week trading this way and trading this exact top-down analysis, combining it with the CCL strategy. Now, to go over the verifiable proof, obviously you guys can check right here. I'm not a guy that rents cars in Dubai and flexes a fake Rolex or whatever. No, obviously not. I've got verifiable proof of everything. You can see right here, $1,150 and $900 right under it. So this equals to 1,150 times 5, because I'm funded on 5 different accounts and I'm copy trading on all of them, right? But basically $1,150 times 5, that's around 5.6K if I do somewhere around that, right? And obviously $900 times 5, that is $4,500. You times that, you multiply that, or sum that up, that's over $10,000 in a single week. So now to make this a little bit easier, so I can go over the trades, let's jump over to trading view and go back in replay bar to show you guys these 2 trades that was taken on the 27th of June and the 23rd of June. So this is the 23rd of June right here. This is the trade that made me $4,500. Now, as I said, we start off with the higher time frames, then medium time frames, and then lower time frames. So higher time frames for direction and bias, medium time frames for setup confirmation, lower time frames for entry confirmation. And if we go to the daily chart right here, you can clearly see that we are bullish with lows, highs, higher lows, higher highs. You get the idea. Now then we go top down analysis. We drop down to the 4-hour. We look at the 4-hour and we are pretty damn bullish if you look at these previous 4-hour candles. Now we did make a little pullback right here, but if you look at the higher time frame picture, aka top down analysis, we are pretty damn bullish. Now this leads us to dropping down to the 1-hour time frame, and look at this. Clear continuation here, clear consolidation here. So with the 3-step strategy, we identify that this is the continuation and this is the consolidation area. Now with this information, do you end up taking a trade right here, right? It's a breakout retracement, so a break and retest. But the key thing here is that everyone is trading this way. Everyone is trading a break, retracement, and then boom, they're anticipating this move, right? So if you would have entered here, if you haven't seen this video, haven't taken advantage of liquidity grabs yet, the CCL strategy, well, you would be simply, looking to take a buy right there, take profit up at these levels right here. Now, don't get me wrong, this is a good trade. You're following the higher time frame direction, but you're missing the liquidity phase. So if you draw it out in the CCL strategy way, you can see continuation, right? Then we start to consolidate, and keep in mind, this is pre-market open right here. This is 8 a.m. Eastern, and the market opens up at 9:30 a.m. Eastern. So this is pre-market open. What happens at pre-market open? We typically move sideways for then market open to push down, liquidate, stop hunt, manipulate everyone, and then we move. So instead of taking a buy right here, well, you got to realize that you're simply missing the liquidity. You're missing the liquidity phase. And in an overall bullish trend, the liquidity phase typically happens to the downside, and then we move up. So in this case, we would anticipate a push up, push down, start to consolidate right here. And then if we get the liquidity phase, which we most likely will at market open, we'll most likely push down, liquidate everyone that had their stop losses down here, stop losses here, and then we'll move. So the liquidity grabs in a higher time frame bullish trend happens to the downside. And obviously vice versa. If we were to do this on the opposite, right, in a bearish trend, the liquidity would obviously be at the buy side. So this means a low, lower high, we start to move sideways pre-market open, then we get a liquidity grab to the upside, faking everyone out. Everyone thinks, either take buys, or everyone that had their stop loss up here by taking sells here, take profit here, stop loss here, they got liquidated, manipulated, and stop hunted. And now what does price want to do? It typically want to do this, right? This is the liquidity phase. So if you draw it out again, right, into 3 phases, right, we get the continuation, then we get the consolidation, liquidity, continuation. Okay, repeatable cycle. So now to go over this trade again, you're clearly missing the liquidity. So what you don't do here is enter like 99% of traders, because 99% of traders are unprofitable. That's just the harsh truth. But then you wait for everyone to get liquidated, stop hunted, manipulated, and then we move. Look at this. This is just beautiful. We push down instantly at market open, only 1 hour, 30 minute, 50 minute. Every single time frame aligns here. We push down, liquidate everyone that had their stop loss down here, everyone that had their stop loss here, and you get the idea here as well. So everyone that was in buy positions here with these stops or these stops or these stops, everyone got stopped out, manipulated, and liquidated. And now, funny enough, we don't enter there, but we'd enter post liquidity grab right here. And do you guys see how we take advantage of the daily time frame first? 4 hour, 1 hour, 30, 15, and now we drop down to the 5 minute to get the best possible entries. And if we delete these levels, you can clearly see that this is a liquidity grab, right? What do we do straight after? 5 minutes into market open, we instantly reject and close bullish right there. So that's your entry right there. On the 5 minute, it's going to look like this, 2 body closures. But on the 15, it's obviously going to be a wick, because on the lower time frames, it's just closures. But on the higher time frames, it's wicks. Because obviously 3 5-minute candles is literally just 1 50-minute candle. So every single time frame tells a story here. The 5 minute gave us a clear liquidity grab to the downside at market open. Then we instantly rejected. The 15 minute is telling us we made a huge liquidity grab following the higher time frame direction. The 30 minute is telling us that we're in the liquidity phase and now ready to continue. And the 1 hour and 4 hour and daily is telling us that we want to continue up because we are overall bullish. So every single time, it's just beautiful. Every single time frame tells a story, and your job as a trader is literally just to figure out the story, right? We took this trade, stop loss was down here on 3-minute lows, I do believe. Yeah, right there. And then we basically rode the wave up to these highs right there. So this is, I believe, yeah, this is London session highs. So London session highs was take profit, logical entry, logical stop loss. These lows, isn't supposed to get broken if we do want to continue up. And we basically continue up, and that's how we made $4,500 in one trade. Now that's the first one. Do you guys see the pattern here? Every single time frame tells a story. It's just beautiful, beautiful price action. Now obviously this trade was also taken with my mentorship group. If you want to, trade live with me, get access to all that, get profitable and funded, check the link in the description. But let's jump over to the next trade that made me over $5,600, I do believe. So now, this is the 27th of June, right? We start off with the daily, as I said, top-down analysis. We start off with daily, we're clearly bullish, right? This is self-explanatory. We're really bullish here. Then we drop down to the 4 hour and identify the direction of bias again. 4 hours also bullish. We drop down to the 1 hour and 30 minute and realize that we are currently consolidating, funny enough, pre-market open. And if you haven't catched up the pattern here, I only trade market opens because that brings in the most volatility. And volatility equals liquidity. Liquidity equals liquidity grabs. And then we can take advantage of those moves. Now, as I said, this trade may be around $5,700. And basically, this right here, if you go, this is 9 a.m. Eastern, right? So next candle is the 9 a.m. Eastern candle right here. Then we got 30 minutes until market open. Now, if you draw the circles again, you can clearly see that this is the continuation. You can also argue that this is the continuation, right? Then we start to consolidate here, pre-market open, not really do anything. Then now at market open, I'm expecting this to be the liquid grab or even a steeper one down here. And then what happens after the liquidity phase, so CCL, we get the continuation phase again, right? Continuation, consolidation, liquidity, continuation, consolidation, liquidity, forever. Repeatable cycle, money prints, right? So now we mark out these previous highs. This is 8 a.m. Eastern highs. We mark out these levels right here, which funny enough also got liquidated right after market open, which is right now. And we play price, right? It's overall in a higher time frame bullish direction. We use the higher time frames to tell us that. And now we simply just wait for a rejection here. And this is just a clear liquidity grab. Clear, simple, easy liquidity grab, right? Our entries was taken on this 5-minute candle right here, right? Stop loss down here, take profit up here. Now, do you guys see the pattern here? We take advantage of every single time frame. Lower time frame, 5 minutes to get the best possible entries. 15-minute, 30-minute directional buys, setup confirmation. 1 hour, 4 hour daily for the trend. Like every single time frame tells a story. And once you can read this, once you understand this with the CCL strat, you can make so much fucking money. It's unbelievable. So now if you go to the 30-minute, or you can even go to the 1 hour, this probably looks cleaner. Yeah, for the 1 hour right here, you can clearly see the ranges, right? Continuation, right? Then we start to move sideways, consolidate right here. Then we get the liquidity grab down here. What comes after liquidity, we get the continuation. Now, this happens every single day. You can, Fast forward here, take profit hit, pretty damn nice. You can also, I do believe it happened, here as well. Yeah, look at this. I mean, it happens on a daily basis as well. So it happened Monday, Tuesday, Wednesday, and Thursday. Continuation, right? Actually, let's go to the 30-minute right here because that looks cleanest, I do believe. Yeah, so 30-minute right here, continuation. Then what happens at pre-market open? We start moving sideways, right? Just generating buy-side liquidity and sell-side liquidity down here. So we mark out the sell-side and buy-side liquidity up there, right? Above previous highs, below previous lows. Now, what happened at market open? You can see 9:30 a.m. Eastern down here, right? So this is Central Eastern Time. This is 3:30 p.m. in Europe, but obviously 9:30 a.m. Eastern in the US. So what happens at market open? Well, we get the liquidity phase, right? So liquidity phase right after consolidation phase and right after liquidity phase, we continue to push even further. Continuation, consolidation, liquidity, continuation. It is so beautiful. This is how I made 10K this week. Let me just show you guys one more thing here. Now, if you've liked this video so far, if you found it helpful or found some new information inside, please leave a like, comment, and subscribe. It means the world to me. And if you want access to this 16-page PDF file going over this entire strategy, the CCL strategy, and how it works so beautifully, you can download this for free. You can also see continuation, consolidation, liquidity, continuation. Every single setup and every single entry type is written in here. And you can obviously read about this as well. If you want to trade live with me, if you want to get my one-on-one coaching, check the link in the description. There's a limited spots. And yeah, as I said, if you liked the video, leave a like, comment, subscribe, and I'm out.